Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Crowdstrike. So Crowdstrike just reported their Q3 results, Q3 2022, and the company is in top shape. I don't own any position here, and this is just for entertainment purposes, not investment advice. But yeah, this is a very strong company. I've always been a huge fan. I'm not a shareholder here, but yeah, I think that they've reported very solid results, particularly if you think about the backdrop in the last several weeks, how it's affected cybersecurity names. But the key takeaway here is that paying 24 times forward sales isn't that expensive for Crowdstrike. Okay, so here's the thing. Last several weeks I've already alluded to, cybersecurity names have been demolished. You can see here in the graph that Crowdstrike and many others have really lost more than 20% of their market caps in the last several weeks. Cybersecurity names have really just gotten a huge haircut, but it's broad, this kind of sell-off in the last in November into early December. It was just it's been everywhere. The market has really become disenchanted of high growth names. There's a lot to get here. So the biggest takeaway for me is that this business is growing at a very rapid rate. If you think about it, I remember when BlackBerry's CEO John Chen was kind of mocking, and he was defending his company's acquisition of Silence, and he was saying, there's no way that Crowdstrike is going to continue growing at those very high rates for such a prolonged period of time. Well, lo and behold, we're at the end of 2021 and we're still seeing those very high growth rates. So, and where's Silence right now? Yeah, that was a little joke in Silence. I think that there's a lot here, and we saw in the quarter that they really kind of went mano-a-mano against Sentinel. So that, it's quite rare to see such an open confrontation. But on the call, they talked about particularly talking about this next generation vendor, meaning SentinelOne. They said that SentinelOne was previously contracted by one of the largest non-profit hospitals in the US, and they failed to deliver on price and promises, and so that hospital went back to Crowdstrike. So it's just one example that they highlight on the call, but I thought that was quite interesting that it was so kind of open about it. So it's quite interesting. You take that as you want, but I think that if you follow a lot of my work, you've seen me say this before, and I'll say it again. The biggest indication that you're going to get about the success of a company is following the customers or the users. And you can see here, subscription customers were up 75% year over year. So I know I'm speaking quite bullishly about Crowdstrike, but this is a company that's always been on my radar. I used to be a shareholder here. I'm no longer a shareholder, but I think that this is just one of those few companies that is just really gets a lot of bad press, particularly. It came out of 2020 was like a crowd darling. Everyone was like, everyone was really fascinated with Crowdstrike. And in 2021, it hasn't really done that well for shareholders. Of course, a lot of that growth was pulled in 2020, so you kind of had to have a bit of a stomach of steel to kind of withstand the vicissitudes that we've had in 2021. But that aside, if you a really long-term holder, I think that you'd be very pleased with these set of results. Of course, everyone is a buy and hold as long as the share price is going up, and when the share price goes down, nobody likes to be buy and hold. But anyway, as I said, 63%, so 63 out of the top Fortune 100 companies use Crowdstrike. So if these companies, these large companies, they not only have the financial resources, they also have the technological acumen to really find out what's the best endpoint protection company. And if they're adopting Crowdstrike, I think that speaks for itself. If you want to get a high quality protection, they would seek out Crowdstrike, and as long as the customer continues to seek out Crowdstrike, I think that there's a worthwhile investment to be made here. Now, one of the things I wanted to highlight, very few businesses that I know, and I follow a lot of companies, are able to be growing at as fast as Crowdstrike. I calculate that it's on a run rate basis, it's close to 2 billion in revenues, kind of probably next quarter, not this quarter right now, not Q3, not Q4, probably starting Q1 2023. But anyway, in a very few months, it's going to be on a run rate of 2 billion. So it's growing at a fast rate, probably somewhere around 40 to 45% compounded annual growth rate. and it's also reporting free cash flow margins of approximately 30%, a bit higher than that, 32%. Now, this is not only consistent with the previous year where it was 33% free cash flow margin, but it's also consistent with the previous 9 months. So it's growing rapidly and it's generating a lot of free cash flow. So I think that, yeah, I don't think that all considered it's that expensive. If you think about it, right, this is most likely one of or the market leader in cybersecurity. So if you hear this is the price to sales ratio looking forward for the next on a forward basis for over the next year. So as you see right now at approximately 24 times forward sales, this is reasonably the best entry point that you've had for some time. But you had this entry point as well back in May, and you have this entry point now. But for all intents and purposes, this is a company that typically is priced at 32 times forward sales. So right now it's probably a reasonable entry point. That being said, I mean, I like the business. And oh, just one more thing I wanted to highlight. So Sentinel, just for comparison, Sentinel is growing really, really fast. But Sentinel is priced at 39 times forward sales. Now, if you know SentinelOne at all, you would know that this business is meaningfully unprofitable. And I put a bit tongue-in-cheek that SentinelOne wouldn't know a profit if it found one on the street. So, I mean, this business is very, very unprofitable. On the other side of the equation, you can consider identity company Okta. Okta's priced at 18 times forward sales. So kind of in that range, right? 18, 20. Now, remember that in the case of Okta, it's not really growing as quickly as CrowdStrike. And also remember that Okta is barely just about break even on a non-GAAP basis. So it's kind of like, you know, you're getting a reasonable discount, I think, here right now with CrowdStrike. Now, as I mentioned many times already, I like CrowdStrike. I have no position here, and I would typically try and work for something that's a bit more contrary, and I'll try and find something personally that has a few more hairs on it. That's really what appeals to me, and I have that temperament, and I'm very much happy to withstand the volatility, and I would search for something that has a few more uncertainties, a few more blemishes, and I would pay a low valuation. And that's the kind of stock that I highlight in my marketplace. It's called Deep Value Returns, and you're welcome to check it out. Okay, thanks so much for listening. Bye-bye.